Welcome to Money First CEO, the podcast for business owners ready to run their business like a boss and make their money work smarter, not harder. I'm Harman Johnston, bookkeeper, Profit First professional, business coach, and mum of two from Sydney, Australia. I've built a thriving business by mastering money habits and systems that create real freedom. This show will help you take control of your finances so you can build a business and life that truly works for you. Every episode delivers one powerful takeaway you can action right away for more clarity, confidence, and cash. And from time to time, I'll be joined by special guests, fellow entrepreneurs, experts, and real business owners, sharing their money wins, lessons, and insights to inspire your next move. Because when you put money first, you unlock the options and freedom you deserve. So hit follow, grab your coffee, and let's dive in. Hey there, and welcome back to the Money First CEO podcast. I'm your host, Harman, and whether you're a long-time listener or this is your first episode, welcome. Today, I want to talk about why most business owners do not know their profit margins. And I'm not talking about people who are just starting out. I'm talking about business owners doing 6 figures a month, people with teams, people with real revenue coming in. They can tell you how many clients they have. They can tell you roughly what they made last month. But if I say, what is your actual profit margin right now, they would go quiet. And that silence, that's not a knowledge gap, that's a system gap. And today we're going to talk about why it happens, why it matters, and how to actually calculate it. And I'm going to share a story from an advisory meeting I had recently as well that completely changed the way a client saw their business. So let's just be honest about something. There is a massive gap between how business owners talk about money and how they actually manage it. On the outside, things look great. The revenue is solid, the Instagram looks professional, the team is growing, and people assume that if money is coming in, the business must be healthy. But behind the scenes, it's a different story. And I know this because I sit inside people's Xero files every day. I see the actual numbers. And what I see over and over is this. Revenue is up, expenses are up, and profit? Nobody actually knows. Not because they're bad at business and not because they're lazy, but because nobody ever taught them how to look at profit properly. And here's the thing, we live in a culture that celebrates revenue. We talk about hitting 6 figures, 7 figures, 8 figures. We talk about how much we made, but we almost never talk about how much we kept. And that is the number that actually matters. So how to actually calculate your profit margin? And before we go any further, let's break this down. Because I think part of the reason people avoid their margins is that it sounds complicated. It sounds like something your accountant should handle, but it's actually really simple maths. Profit margin equals your revenue minus expenses divided by your revenue times 100. Let me walk you through a quick example. Say your business brought in $100,000 last month and your total expenses, including wages, rent, software, super, insurance, all of it came to $82,000. That means your profit was $18,000 and the profit margin is 18%. Now, here's where it gets interesting. There are actually 2 types of profit margin you should know about. Gross profit margin, this one looks at your revenue minus your direct costs only. So costs that are directly tied to delivering your service. Things like contractor fees, direct labor, materials if you use them. And this tells you how profitable your actual service delivery is before all the overheads. The formula is revenue minus cost of sales divided by revenue times 100. So if you brought in 100,000 and your direct costs were 40,000, your gross profit margin is 60%. That means for every dollar of revenue, you are keeping 60 cents before overheads or operating costs. And net profit margin, this is the one that really matters. This is what is left after everything, all your overheads, your rent, your team, your subscriptions, your super, your insurance, all of it. And the formula is revenue minus all expenses divided by revenue times 100. So using our example, we calculated 18%. Now, here is what I want you to take away from this. You do not need to calculate this every day, but you do need to know this number every single month. Because this is the number that tells you whether your business is actually working for you or whether you are just working for it. And here's a rough guide for service-based business owners in Australia. A healthy net profit margin is generally somewhere between 15 and 25%. And if you're under 10, we need to have a conversation. And if you're under 5, you are essentially working for free once you factor in your time. And if you do not know the number at all, that is exactly what today's episode is about. So why business owners don't know their profit margins, and why is this so common? Because it's not just one thing, it's a combination of things that all stack up. The first reason is everything sits in one account, and this is the big one. Most business owners have one bank account, maybe two if they have a savings account sitting there doing nothing, and every dollar that comes in lands in the same place. Revenue, tax, super, wages, your pay, operating costs, it all sits in one pool. And when everything is in one account, your brain does this really dangerous thing. It looks at the bank balance and thinks that's how much money you have. But it's not. Half of that might be committed to tax. A chunk of it's for next week's payroll. Some of it's GST. And that's not even yours. So you spend based on what you see, not based on what you actually have. And that's how you end up making really good revenue and still feeling broke at the end of the month. The second reason is revenue gets all the attention. We are obsessed with top line. And I get it, revenue is exciting. A big month feels amazing. Landing a new client feels like progress. But revenue without structure is just activity. It's not profit. I've had clients come to me doing 150, 200,000 a month and their profit margin was under 5. They were working harder than ever, their team was growing, but the business was barely keeping up. And they had no idea because they never looked past the revenue number. Tori Dunlap, who runs the Financial Feminist podcast over in the US, talks about how this is a lot in the personal finance world as well. She says you have to know your numbers before anything else works, and I could not agree more. That principle applies just as much to business finances as it does to personal. If you don't know what you are actually keeping, you are flying blind. The third reason is the reports don't make sense. Business owners will say, I have an accountant, I have zero, but I still don't understand my numbers. And honestly, that's not their fault. Most profit and loss reports are built for accountants, not for business owners. They are full of jargon, they are structured in a way that doesn't match how you think about your money. And they usually arrive months after the period has ended. So by the time you see the data, it's already too late to do anything about it. That is like driving a car and only being able to see out the rear window. You can see where you have been, but you have got no idea what's coming ahead. And the fourth reason is shame and avoidance. This is the one nobody talks about. A lot of business owners avoid their numbers because they are scared of what they'll find. There is this voice in the back of your head that says, I should know this by now. I should be better at this. What kind of a CEO does not know their own margins? And so instead of looking, you avoid. You tell yourself you will get to it next month. You focus on the things that feel productive, like marketing, clients, launching, something new and exciting. And the money stuff just sits there getting messier and more stressful. But here's what I want you to hear. Not knowing your margins does not make you a bad business owner. It makes you a normal one. And the system was never set up to make this easy for you. And the fact that you're listening to this right now means you're already ahead of most people. So I want to share something that happened recently because I think it's really will resonate with you. I had an advisory meeting with a new client. They're a service-based business doing really solid revenue, growing team, good reputation in their industry. On paper, everything looked like it was working. And they came to me because they wanted to set up profit first and outsource bookkeeping so they can focus on growth and ensure everything was done in a compliant way as they just felt like something was off. And that's most of the clients that come to us. They could not put their finger on it. The money was coming in, but it never felt like enough. They were stressed about hiring. They were nervous about end of financial year. And they kept saying the same thing. I just do not know where it all goes. So we sat down and I started asking questions. Not the usual questions they had been asked before. And not just what is your revenue, how many clients do you have? I asked things like, what percentage of your revenue goes to delivering the service versus running the business? When was the last time you actually paid yourself a consistent amount? Do you know how much of the money sitting in your account right now is already committed to tax and super? And if your main staff member left tomorrow, how many weeks of runway do you have? What does your business need to look like for you to feel calm, not just successful? And they looked at me and said, nobody has ever asked me those questions before. And that moment right there is exactly why I do what I do. These are not tricky questions. These are the basic questions every business owner should be able to answer. But nobody asked them because most bookkeepers and accountants are focused on compliance, not clarity. So we spent the next hour going through their numbers together, not in accounting language, just plain English. We looked at their actual profit margin, which turned out to be about 9%. They thought it was closer to 20. We mapped out where every dollar was going. We identified the expenses that had crept up without them noticing. We worked out how much they should be paying themselves. And we talked about what their margins would need to look like to actually fund the growth they wanted. We discussed doing an expense analysis to see where we have room for improvement. By the end of that meeting, this client said something that stuck with me. They said, I feel like I can finally see my business clearly for the first time. And that is the power of understanding your numbers. It's not about spreadsheets or formulas. It's about making decisions from clarity instead of stress. It's about becoming the kind of CEO who runs their business with confidence, not just hope. And that one meeting gave them a roadmap. They knew exactly what needed to change, where to cut, what to protect, and what their margins needed to be to hit their goals. And for the first time, they felt in control. So what does the fix actually look like? And I'm going to keep this really practical because I know that is what you come here for. Step one is separate your money. This is the single most important thing you can do. Set up separate bank accounts for different purposes. One for operating expenses, one for profit, one for tax, one for owner's pay. When money comes in, you allocate it into these accounts based on percentages. And this is the core of how I work with my clients. And it sounds simple, but it changes everything. Because now when you look at your operating account, that is actually how much you have to run the business. Your tax money is already set aside, your profit is already protected, and you are no longer guessing. Step two is know your three numbers. You do not need to understand every line on your P&L, but you do need to know these three numbers. Your revenue, what came in this month, your expenses, which is what went out, and your profit margin, the percentage that was left. That's it. If you know those three numbers every single month, you are ahead of 90% of business owners, and you can make real decisions based on real data. Step three, look at your numbers weekly, not monthly, not quarterly, weekly. I call this a money date. 15 minutes once a week, sit down with your accounts, look at what came in, what went out, whether your allocations are on track. And this is the habit that transforms everything. Because when you check in weekly, nothing has time to get out of control. There are no surprises. There is no 3 months of mess to untangle. It is just a calm, consistent check-in with your money. And honestly, once you start doing it, it becomes one of the most empowering parts of your week because you go from avoiding your numbers to actually understanding them. And that shift from stress operator to calm, clear CEO, that is the whole game. Step four, get someone in your corner. And I do not mean someone who just reconciles your transactions and sends you a BAS every quarter. I mean a financial partner, someone who asks the questions nobody else is asking, someone who explains your numbers in plain English, someone who is proactive, not reactive, and someone who helps you think like a CEO, not just survive like an operator. And that is why we built the financial calm system here at Blue, because the business owners I work with are smart and ambitious and hardworking. They don't need more revenue, they need a system that gives them clarity, control, and confidence around their money. So here is what I want you to do after this episode. If any of this hit a nerve, if you are sitting there thinking, that is exactly how I feel, then I want you to book a discovery call with me. And here's the truth. Most business owners have money blocks they do not even realize are there. Things like not knowing your margins, avoiding your numbers, spending reactively, not paying yourself properly. These are not personality flaws. These are blocks. They are keeping you stuck. And in a discovery call, we'll sit down, work out exactly what your money blocks are, where the gaps are in your financial visibility, and how we can help clear those blocks so you can actually move the needle in the right direction. But here's the thing. I only have limited spots available before the 30th of June as we're heading into crazy time of year. The end of financial year is right around the corner, so this is the time where getting clarity matters most and panic hits. So if you wait until July, you already missed the window to make smart decisions for this financial year. So if you have been thinking about getting your money sorted, or if you have been telling yourself you will deal with it next quarter, then this is your sign. Book the call. Let's have a conversation. No pressure, no jargon, just a real chat about where you're now and where you want to be. The link to book is in the show notes, or come find me on Instagram at Blue Bookkeepers and send me a DM saying money blocks, and I will send you the link. And that's it for today's episode. Thank you for listening. If this episode hit a nerve, share it with a business owner mate who needs to hear it. And if you have not already, hit follow so you do not miss next week's episode. Remember, when you put your money first, the rest will follow. I'll see you in the next episode.
Thanks for hanging out with me on Money First CEO. If you got value from this episode, hit subscribe, drop a 5-star review, and share it with someone who's building their business too. All the goodies are in the show notes, and you can find me on socials for more tips and tools to help you. Until next time, keep putting money first and the rest will follow.